Hello, everyone. Welcome back to the RationalInvestor.com's daily brief recap. Always a challenge to see whether YouTube will kick in, and welcome back to it's kicked. Yay! So here we are. Where are we? We are this December. Oh wow! Yeah, wishful thinking. Hopefully, we get the hell out of this damn year. Nope, we're only halfway through. It's June. Ah, jeez. Anyway, June 18th, Thursday. Thursday, of course, TRI is baby powder report day. So we had Julian checking in. And what a tough life. The guy lives in Thailand, and of course, all tourism is completely shut down. So all the resorts are desperate for business. So he's going around hanging out in these luxury resorts at like, $300-400 a night for like $80 a night. What a lucky guy. So he reported in from the field, and I thought on balance a very good offering. And in essence, our message of extreme caution right now, I think, is universal. This is a very, very dangerous little point we are in the market. Breadth rolled over. It's in the process of cleaning itself up. But usually this takes a little while. I mean, you can see how long the last rollover was. You can see how long the last rally window was. Since we have, of course, government's attention in the market, and, central banks are looking at this virus as not a sort of intentional event, but like kind of an accident, a crisis, if you will. So they're on the trigger, ready to support the market. This has nothing to do with financials. So we could at any point, and Julian just said this, like, don't fight the Fed. If the Fed, like last, I think it was a week or two ago, we potentially had the market breakdown there. Fed came rushing in and said, we're going to buy all the corporate bond ETFs. And all of a sudden the market turned right back up. So just be cognizant of that. I am starting to get sort of early warning sell signals in the stock market, but I am fully prepared to walk away from those shorts if the market actually starts perking up and moving higher in earnest. But having said that, very dangerous market here. So actually I do have a few shorts that are just accumulating them. Of course, if the market pays you on anything that you're long by having insane pops, well, just make damn sure to pay yourself. So with that said, our simple chart deck that we like to show you guys, US dollar index. Actually, I put this really cool tweet out today. Go check out the Twitter feed. I did a Bitcoin, one of these billiard ball theory prognostications, if you will, on the Bitcoin market from 2015, I think it was, an absolutely perfect billiard ball play out, including big dump right at the end and then huge rally following the fractal, which is what should happen. So if this is a billiard ball fractal and we're on this kind of path, really we're in the very wonky, and gee whiz, this is another celestial event. What's fascinating about this too is that, a celestial event was right here, another one right here, another one here. What a coincidence. This silly market proxy seems to be coinciding with those celestial events quite well. It's remarkable, really. So the point that I would just simply make here is we have been talking recently risk on, risk off. This is sort of a risk off kind of proxy right now. It's actually breaking out to new highs. Nice little bull AB equals CD. Looks to me like we're coming up into this area here over the near term. And also, too, we've been talking lots recently about how the euro was looking very heavy. So really shouldn't surprise us. Actually, it's on this one, isn't it? What was so cool about this euro is I did up this sort of fractal. Yeah, here it is, the market symmetry study from a while ago. And if this was a replication, this is the exact opposite picture of that US dollar fractal. We were looking for a big rally, which sort of corresponds with that peak there. And then a serious pullback, right, which would correspond with that dip there. So in essence, that's exactly what it looks like we're getting here. Now, we actually have a very well-defined head and shoulders, but also an M top, right? I mean, everything here says maybe not a good idea to be too bullish of the euro right here. That's what that says to me. And then, of course, too, right, this is a risk-on proxy. So if this thing's topping out, well, what do you think risk-off proxies should do? They're probably going to start heading higher here. You can see the little uppie in the U.S. dollar. And really, U.S. dollar index got a lot of room to run here. Just be ready to that, but not surprising. U.S. bond market. Remember we talked about that inside bar yesterday? So he's rallying right into the gap here. It's going to be really interesting action. You can see that wick on the bonds, which means, of course, there's a whole bunch of trapped bulls in that wick. They probably love nothing more than to be released here. That's the stock market. I didn't want to get to that just yet. Looking at the bonds that risk off. There's that inside bar. I would have actually thought we would have come down a little bit lower, but let's see where we ultimately topped out here. So we banged into 38.2 on a clothesline basis and just missed the 50% rule. In fact, probably if I take that back there, that low there the other day was 174.29 and the 50% level was 174.23. That's awfully close. So inside bar fail. Inside bar full. Bull. Try saying that 10 times fast. Filled in a gap, right? Remember we talked about how the market gap there the other day. My hunch is there's a bunch of trap bulls in here that would love nothing more than to try and get released. So we'll see whether this actually runs into resistance. If it does, then that means that the stock market's probably found some footing and it's getting ready to move higher. Risk off, this gold market just basically parked again. And frankly speaking, I think, our analysis about a month or two ago was kind of like, we were heading higher, but then we had bot levels, remember all that, and they got sort of move stop to scratch, move stop to trailing, blah, blah, blah. Then we've come back into sort of trading range, and really until this range is resolved, we're in a range. Just get used to it. And interestingly enough, right, if that risk off vote really does come in earnest, does the metals market have a hard time here because it's one of those I can't sell what I want to sell, so I got to sell what I can sell, and I'm going to sell off my gold stocks and gold that I have on the books. Always tough to say. I mean, frankly speaking, I think I've said the same message here for a while. Really got to see this range resolved here before you can really make any conclusions. And it's interesting listening to John Hoagland this morning talking about the gold as well. And his sort of sentiment is this market is dominated by the lower time frame players right now. All the guys selling against highs, buying against lows, the day traders. This is their market right now. We're not trending right now. So as soon as this thing does start to trend either higher or lower, then we can start looking for sort of continuous patterns going forward. Right now, she's just parked. And, of course, Julian loves trading his gold. So, of course, we spent a good portion of today talking about conspiracy theories. Somebody's sitting on the gold price. And, of course, all you gold bugs, you love that kind of talk. Heading over to risk on and risk proxies itself, I have been squawking about this U.S. stock market and how it's starting to look very kind of heavy. Our breadth indicator is starting to get heavy, and, I even put tweets and stuff out to the effect like we got trade location, we got divergence. Now it's just a question of structure. And I even said yesterday, hello, man, that looks like an inside bar. And sure enough, heading into the employment report this morning, that inside bar fired on these futures. We are sitting just above the fail level, and frankly speaking, I have no idea how this is going to play out. But I like the short trade, believe it or not. It's a good-looking trade. If I was playing these futures contracts itself, it would be that two-bar pattern. If it's busted out, I would just keep hunting, keep hunting, keep hunting. The way that I've actually played this, and I'll leave that for site members. You want to know how I'm short the stock market? Join the site. All I'm going to say here for this message is inside bar did fire, so not a big surprise. Shorters are thinking short. Interesting. What did they call it? OPEC plus 10 or something like that. came out with news today that really tried to put a floor in the oil market. And we were seeing the silver and the gold market looking heavy. And keep in mind, oil and gold usually move in opposites. So we'll see how this goes, and I think I even said yesterday that, quite often oil will lead the market. So, if this oil market has legs and it goes and busts out through the top, I wouldn't be surprised to see the stock market bust out those shorts as well. And I don't know. I think the inside bar did fire. 37.48 here on this August contract. Today's low is 37.40. So actually the inside bar there did fire. But as I said, on that OPEC plus whatever the hell it is saying, hey, we're going to cut production, the oil market is catching a bit of a bid. Remember too, though, this is actually a really dangerous day today in that we have what's called quadruple witching coming up tomorrow, which means that we have options on stocks. We have stock indexes. We have futures contracts. We have options on indexes, options on futures contracts. Whole bunch of this stuff expires. So I would be very leery about reading too much into today's price action. And that's kind of why I said I have started to nibble away on shorts, but I'm not like, pound the table, we got to drive this thing into the ground. I'm just sort of like, I'm going to put my feelers out. And I did strap on a short yesterday heading into the close in the stock market. So with that said, it gives you kind of an idea of risk on, risk off. Risk on looking a little bit dangerous here, and risk off catching a bit of a bid. The one that doesn't make any sense with this whole picture is what the hell's the damn gold up to? All right, moving on, sort of finishing, or not finishing, but continuing on our conversation about risk on, risk off in the junior stock market. We talked a little bit about it looking heavy. What's really interesting, too, is Julian, of course, is very interested in crypto, and he watches the junior crypto market, and you can see this shit perp index looks extremely toppy. This looks, and again, same sort of thing, full disclosure, I am short I'm long a few Bitcoin put options. But, gee whiz, that looks uglier than sin. And, trade location, do we have signs of divergence? Are you going to get this big structure signal to come in? If it does, then look out below, everybody. Look how far this market has come in just a few months. So same thing in the junior stock market. It's really the same conversation, ironically. Market has come a long way since its lows, and all this is a relationship between big stocks and small stocks. And you can see we emmed out, we counter trend rallied. If we can break out through the top, the oil market leads us higher, S&P's breaks inside bars, whatever, then okay, we're back in business. But for the time being, as long as I see this kind of pattern working, I don't have a propensity to buy a lot of stock right now. Having said that, I am long stocks. I don't know whether I mentioned this to you guys in the public, but this is absolute textbook what we teach. You literally could not have a better example of a trade setup here. You literally couldn't have a better one. Obviously, one of our TRI SOF ideas, we have a club on the site for our veteran members. Talked lots about this, pretty good share structure, excellent location, bullish divergence, W's all over the place. Nobody should be surprised to see that, we banged out a big win here today. And what was really cool about this trade, and this is why I like working open orders, is you can see the stock actually opened up here, way up here. And it turns out my double on this trade is at this level. But because I had my open order working, they filled me right where the market opened. Not a bad trade, eh? So it turns out I almost got a sell half on a triple. Came pretty close. It was within 60 cents of a triple. But as you can tell, Brian's not feeling any pain today. So fantastic day. Way to go, Brian. And really, I hate to say it, everybody, this is so simple. It's not rocket science. It's all about just building your plan, identifying what gets you to act, and then when all of the criteria comes in, you act. That's the hardest part about this whole damn game. Actually ringing the register today, that's the easy part. Finding this, going in, seeing all this criteria, saying, oh my God, all of my criteria's here. I have to go and buy. And then, of course, take appropriate risks, and then, when the market affords you the opportunity to get paid, pay yourself. So that's my day. Pretty happy camper today. As for crypto and the corn, I've already talked to you a little bit about altcoins looking very, very dangerous here. And of course, I've talked to you about Bitcoin recently. I suppose if risk on is looking heavy in the stock market, and I like to think Bitcoin and crypto is a risk on asset, then this picture should be concerning. What I find fascinating about the corn right now, and my charts kind of blew up last night, so I had to reload everything. I lost a couple charts that I was studying. I don't have the bow tie chart, sorry everybody. But remember this study about the pre-halvening pump and then the pre-halvening dump and then the following, what should happen following that? I find this fascinating that we've literally come right to the apex of this triangle. And I don't know if this is what's supposed to happen here, but I find that absolutely fascinating considering how the stock markets and our breadth and everything, shitcoin index looking heavy here. I just find it fascinating how everything is lining up here. I don't know what's going to happen. I haven't got a fucking clue. I will say that we do have M's. The market is smiling at you, so my propensity is to the short side rather than the long side. And I've said repeatedly, we get any serious dumps below 5,000, I think it's a fantastic buying opportunity. At $9,000, $10,000, I think Bitcoin's a bit rich. It's expensive. So as a result, obviously, I'm not buying any Bitcoins here. So, okay, everybody, I think I'll leave the presentation at that. Play from a position of strength. Be careful, everybody. Very dangerous market. PMA for the win. All the best. And the only thing left for Brian to say at this point is bye.